So let's get started here with what we're going to be talking about. Um, yeah, here's a look at my charts, and we're looking at the CAD Swiss franc, and this is the 4 hour time frame, and I'm showing you a trade that I'm in, a trade that I entered off of the price action. Now I still wanted all my Ichimoku signals to be bullish, the direction of the trade that I was going into. So what I looked at was, first of all, price was above the cloud, so that's bullish right off the bat. You know, the bias of the market is bullish. All right, and then I had a TK crossover back here that was already bullish. My Kumo future, which was my twist, happened already, and that future was bullish. And then Chiku span was above price, which was bullish. So that's giving me all indications to take this trade long. So I had to find an entry, and my entry was off of some price action. Now I looked for a pullback to support and resistance level. So this support level, which was the Kijinsen right here, we didn't all the way touch that level. But remember, support is not an exact level; it's an area of support. Okay, so we looked for price to pull within that area of the Kijinsen. Sometime you will see price hit exactly on a level, and you'll think like, wow, this is just exactly how support and resistance is. But don't get that twisted. It's not exactly a level, it's an area. Okay, so I'm looking for price to pull back to this level, which was my area of getting to the trade. So how was I looking to get into the trade? Once price pulled back, I saw signs of possible reversal. Okay, so we know that the trend was upwards and we're looking for a long trade. Once price pulled back, we look for that reversal action, and the indication of reversals were here. Price pulled back, then you saw this two little candles here, then you had a doji here, and then you had an inverted hammer. Then we really started to think that maybe this level was good. And then we, next to the inverted hammer, we got this green candle here, which formed a base with the red and green. That forms your support base. All right. So you had a support base up here that got invalidated because you had the base here, and then you had this candle close below the base, barely, but then you had another candle close below. So it broke that base. But then we had this base here, and that base held because this candle closed. So that was my sign that maybe the support level was holding. So I had to get confirmation from my next candle, and here it was right here. Once this candle closed above that level, I entered the trade. I entered the trade at this level, but with the spread, I had to take this level here. So I was up here a little higher than I wanted to be. I wanted to be right there, but you know, a few pips, 6 pips, that was basically. And then price took off. You know, I had all my signals were bullish, and price took off. You know, this candle fooled around for a minute, but then we got back to normalcy, and then here we go. Price took off for me here. And now this level was important for me because we want to close above this level, and we pretty much closed a little bit above that level. We got a peak right here with a wick, and we want to see what's going to happen. Looks like Kijinsen and Tengen-sen are flattening out. Now I moved my stop loss up to this level because I want to be just a little below the Kijinsen. So in case price comes back down, you know, that's going to be the level where support is going to be. Now I only got 23 pips on this trade, so you know, at least if the trade does come back on me, I'm going to break even or maybe make a couple pips here and there. So it won't be much if it does come all the way back, because I need it to take off and really hold this level. I'd love to see it hold this level as support now. Once we already got above that level barely, I want to see that level hold. Okay, but what could happen is maybe price starts to range. Maybe this is the start of a range level here. Price ranges for a little while because you could see the volatility of the market with the wide Kumo here. Once you start seeing volatility like that, then maybe the market's going to range. But the thing that we need, if we get a close above this level and it stays above that level, then we know that range won't happen. That means we're moving. But it did have some nice momentum in it. You can see the way that the Chico span is pointing up, and the way that Kijinsen is pointing up, and Tenkan-sen's pointing up, and then also your Senkou span A is pointing upwards. But now everything is starting to flatten out here, so we want to see what's going to happen. Hopefully this level holds for me. But that's how I got into the trade off of that price action there. And I'm going to show you another price action trade that I use a lot, and I'll show you that a little bit here. But let's jump to another chart. Euro pound, you can see this channel that the euro pound is in. This is a bullish channel that we're in. The price is pointing upwards because we're making higher lows and higher highs. So you can see the low here, this low here, but then we made a higher low. You have a high here and then a higher high. Now what we're looking for a price to break outside of that Kumo cloud, and that'll be the breakout that we look for. We have all the signals. Right now we have the twist right here, which our future is bullish. All right, and that future being bullish does not mean that's where price will be in the future. That just is showing support and resistance levels in the future. So we know if these levels are support and resistance levels in the future, then price may stay above this level. All right, so we got a TK crossover that is bullish already. Chico span is a little bit above price, but we got a lot of resistance from the cloud. We need to get on the other side of that cloud. So maybe I think price may range here for a little while before it finally gets outside of the cloud real well. So we'll look for price to break to the upper side of the cloud. Now if price breaks the lower side of the cloud, we're not even going to be into the trade basically till it gets to this level. And by the time it gets to that level, based on where the Kijinsen is, I may not even get into the trade. So it'll be somewhere around there when it breaks through, and if it drops to the low side, because we need Chico span to be below price, we need that confirmation from Chico span. And if we don't have that confirmation, we really don't want to get into the trade. We want to keep all probabilities in our favor. So the only way to do that is to take trades that meet all of our criteria based off of our signals. All right, so if you don't have all your signals, you just don't want to take the trade. There's going to be a lot of trades. If you're looking at a few pairs, and you can see up here how many pairs I'm looking at right here. So looking at all those pairs, there's going to be opportunities. So don't force anything or rush anything or make things happen that aren't really there. So we can wait. If that breakout happens, we might be too far away from the Kijinsen. Like I said, then we don't want to get into the trade. When I enter a trade, I want to be as close to the Kijinsen as possible. Looking at the last trade I got into, we weren't that far from the Kijinsen. We got in here, we were 22 pips away from the Kijinsen. We want to be as close as possible. And looking back at that trade now, you can see maybe price is still continuing to move upward. We'll see. This is a 4-hour candle, so we have a long way to go there. Back to the euro pound, looking at this bullish channel here. This channel is showing support and resistance levels also. This is a support level, just like a trend line here. And then you have this upper trend line for a channel, forming a channel where your highs are hitting. So being that we're staying inside that channel, everything is confirming to what we're looking for, because we're inside the channel. So we're bullish channel, bouncing off of that support and resistance level and looking to eventually break through this cloud here. All right, so price, like I'm saying, I think price may range a little bit here, because looking where Chico span is with all the resistance that it's facing, and then it'll be below these levels here. If Chico span needs to get on this side here and get over this side here, when that happens, I think we're going to range and before we get outside of this cloud here. So it may not be a clean breakout that we like to see, so you have to be aware and watch out and see how this one happens. So we're going to keep an eye on the euro pound. That's one that we're going to look at. Like I said, for it to break low, depends where your Chico span, where your Kijinsen is, how far away that is, where your level is, because that's going to be your level of your stop loss level. All right, so we'll see. We'll move on to the next one. Now I'm going to show you some other things. Now I get into the market off of a lot of times off of price action. Now here we got another breakout that was happening, and this is a breakout that I didn't take, because look at price went inside the cloud, and once it broke out with this big candle, you'd be like, oh, this is really good. We got a strong big candle. You had all your signals were good except one thing, because you had a price above the cloud, breakout on the cloud that was bullish. You got a TK crossover here that is bearish, but you got a bullish future, and then you got a Chico span that's inside of price, which is neutral. It's not really a bullish signal. What we need Chico span to be above that price. While Chico span is inside this price realm here, you're going to be ranging. Look what happened. We broke above that level, and then we stayed in this little range here, and it's going to continue to range until we can get above that level. Once we get above that level, we know we're above 26 periods ago, which means we're starting to trend up or trend down. Now, right now, you had this bullish crossover here. You didn't want to be into this trade on a bullish TK crossover with a Chiku span that was neutral based off of being inside the price action here. You want Chico span to be above the price action to be going long and below it to be going short. So your signals were conflicting, and you didn't want to take this trade, and this trade so far wouldn't have worked out. Now eventually it may work out because now your crossover is developing, and Chico span eventually may get above the cloud, and then you'll say, well, it worked out. But yeah, it may not have worked out, and it could have came back and taken you out and then worked out. So keep the probabilities in your favor. Don't take those kind of trades. That's one that I wouldn't have taken, and I did not take. All right, so now here's another thing. I take trades off of price action. So if I get a bullish engulfing candle, what I look for at support and resistance levels, here's my resistance level. All right, the resistance level is the cloud here, and my Kijinsen. So I got a bullish engulfing candle, barely bullish, but it's a bullish engulfing candle because it's bigger than the next candle. Then I got a TK crossover that's bearish, and I'm saying bullish engulfing. This is a bearish engulfing candle. Sorry, this is a bearish engulfing candle. A bullish would be if it went above, if we had another candle that was higher than the other candle. This is a bearish engulfing candle. It's breaking lower than the other previous candle. So that's a bearish engulfing candle right here. So we would have said, well, we could enter the market there. But the reason I wouldn't have taken this trade is because, first of all, you got a TK crossover. That's you got a bearish TK crossover, so that's a good signal for you. And you got a bearish future, so that's another good signal for you. But Chiku span again is inside of price. You need Chiku span to be below price, and if it was below price, it would be way down here, and this is where you would look for your entry. And this would be one I wouldn't want to get into because I may be too far again from my Kijinsen. I don't want to be that far from the Kijinsen. This would be the level. All right. So looking at taking a bullish breakout, a bearish engulfing candle, that's one right there that I wouldn't have taken. But let me show you one that I would have taken. All right, here we go. So this is the Aussie CAD. Now we're going to look for price drop down. Now we need a pullback. So we get a pullback. Now when we get that pullback, we're looking for a way to enter the market. We're going to enter the market off of some price action. The price action we're going to look for is the bullish engulfing, the bearish engulfing candle. I keep saying bullish because I think so much of bullish trade, but we're looking for a bearish engulfing candle, and we're looking at that at a resistance level. So here was the resistance level right here. This is the resistance level because it's the Kijinsen. All right, so when price came, moved down, had the little break, had a big breakout here. You couldn't get into that one there, but then price pulled back, and then we need a way to get into the market after hitting this resistance level and this resistance level holding. And here's how we see the base again, like I told you on the previous chart. You had this green candle. Now you got a bearish base. So here's your green candle and then a red candle forming that base up here. Here was a base here, but it got violated. But that whole area is still within trading, because you could see that area is still up here where these wicks are and where my support and resistance level is right here with the Kijinsen. So we formed another base, and then we had another support resistance level at resistance. All right, and then finally we had a bearish engulfing candle. Here's your bearish engulfing candle, and this is the level you would have gotten to. This is a big bearish engulfing candle, and you would have gotten to the trade right here. Your stop loss would have been a little bit above this Kijinsen, which would have been above this wick here, because this wick pierced that high, so I would have put it a little above that level. And then you could see the trade would have worked out because you had your TK crossover, which was bearish. Price is below the Kumo cloud, which is bearish. All right, your future has been bearish, and then Chiku span was below price. There's nothing in Chiku span's way, and this is a good trade. Okay, and you can see what happens. It was a pretty nice trade and it's still in play. So you want to make sure you have all your signals. Chico span, very important to look at. A lot of people don't put it on their charts, but I showed you a bunch of incidences where it really made the trade valid or invalid. All right. And if you don't listen to Chico span, a lot of times you're going to be wrong because Chico span is telling you the price of 26 periods ago. Is it trending or not trending? All right. So on this one, you had all your signals were bearish, and then you had a bearish engulfing candle. All right. So this bearish engulfing candle, which is bigger than the previous candle, and this is a short bearish engulfing candle, that lets you know that this trade was good off of the price action. All right. So that's what I looked at, traders, and that's one thing that I trade. That's a way that I trade, and like to show you guys some things like that and how I really look at a lot of different price action entries, and that was just one of them. All right. So until next time, traders, have a great trading day and God bless you guys. So long.